John, Mary, your current mortgage is $350,000, correct?
Yeah, that's right.
Okay. And that this is the type of coverage that if you, John, or you, Mary, should die, the mortgage of $350,000 would be paid off for the family.
Okay.
Now, it used to be that when you died, the money would go directly to the lending company.
Okay.
But now it's set up that the money goes directly to the family. And John, Mary, this is huge.
Right.
The family can either pay off the mortgage in one lump sum, they could pay down the principal, or they can even make payments until they're ready to sell the home. Do you see how important that is?
Yeah, it's extremely important.
Right? The family has the option to keep the home, and also the option if they wanted to pay down, or excuse me, to make payments until they can sell the home, allows them to extract any equity built in the home, and that could be major.
Yeah, that can be life-changing.
Yes. So John, Mary, do either of you guys have any work insurance?
I think I do. I have about 50,000 with the work life, and I think Mary has 25,000.
Okay, that's great. I'm glad you guys have work insurance, but unfortunately, as you guys both know, you can't take that insurance with you whenever you leave the company.
Okay.
John, Mary, do either of you guys have any major health concerns, like any major surgeries, diabetes, high cholesterol, etc.?
Does this a certain time frame since, or
Within the last 5 years?
last 5 years? No.
No?
Major
Are you guys smokers?
No. No,
No?
I used to smoke like 2-3 years ago, but
2-3 years ago?
and that was cigarettes, and
Okay.
no longer use.
Okay.
It's been about 3 years.
3
since-
years? Okay.
But yeah, Mary doesn't smoke.
Okay. And by the way, John, what is your what is your date of birth?
That is 12/23/1990.
Okay. And for Mary?
We're actually at the same birthday, so yeah, 12/23/1990.
Oh, nice. That's awesome. Excuse me. So, John and Mary, I am an insurance broker.
Okay.
So that means I do business with over 100 different companies. That allows me to find a plan for you guys with the most amount of coverage and the most competitive rate. Excuse
Okay.
me.
All right. That's awesome.
Excuse me. The current companies that we're recommending right now are Nationwide, Mutual of Omaha, American General, and American National, and many other huge companies.
Okay.
There is this company called AM Best. That's a credit bureau that rates the insurance company's financial strength.
Oh, okay, that's good. It's good to know.
Excuse me. And so, although in the last 140 years there's never been a death claim denied because the insurance was insoluble.
Insolvent. Mm-hmm.
Oh, insolvent. Excuse me. Meaning that insurance companies are backed by the federal government. It's still important to be with a strong company. Don't you agree?
Yeah, I agree with you 100%.
Life is unexpected, and that's why the companies that we recommend are either A-rated or better by AM Best and Standard & Poor's.
Well, that's good to know.
Yes. It just allows you that much more peace of mind.
Yeah, that's true, definitely.
I've sat down with 1 or 2 people weekly that either have cancer or have had a heart attack or even drug-related problems. And on occasion, we are unable to help them get the coverage they need to protect their family.
Wow.
Now, your guys' home mortgage protection plan is $350,000. So you'll receive that in the event that you should die.
Okay.
In addition, once you're approved, you cannot be canceled.
Wow.
Excuse me. So, and unlike auto insurance, they can't take away your insurance or change provisions due to a change in health.
All right.
All right, I'm going to prepare some options for you guys, and I'm going to allow you to watch a short video.
Okay, awesome.
All right?
All right. Watch the video. 2-3 minutes. All right, great.
Okay. All right, the way that your home mortgage protection plan is set up is, John, in the event that you should die, your family receives $350,000.
Okay.
And Mary, in the event you should die, your family would receive $350,000. And if you guys, and if you guys should die at the same time, your family would receive double the amount.
All right.
So in your guys' case, it'd be $700,000.
Wow.
This money is paid immediately within 8 to 10 business days. It's income tax free and avoids probate. Are you guys familiar with the probate process?
I've heard of it, but not too familiar with it. Could you explain?
Yes, it could be a very difficult time for the family. It can take the state of California up to a year to sort out all of the family's assets.
Wow.
This home being one of those assets.
Okay.
It also avoids creditors. Excuse me. So if you have any outstanding debt, the creditors won't be able to touch this money.
Wow, that's awesome.
Yes. Some of the benefits are the common carrier rider, which is if you should die in a train, bus, or airplane accident.
Okay.
Actually up to 180 days after the accident as well.
Wow.
Your family would receive up to 2 times the amount of your coverage.
Okay. Awesome.
So for example, it's up to 300,000.
Okay.
Excuse me. And so if you should die, you would get the $350,000 plus $300,000.
So a total of 650,000.
Yes, that's correct. And then in the event that you both die in that same common carrier accident, then you would get the $700,000 plus the $300,000.
Oh wow. Okay.
And then the critical illness rider, if you should have a heart attack, stroke, cancer, or Alzheimer's, you'll have direct access to your $350,000 death benefit.
Oh, that's pretty sweet.
And then for your chronic illness rider, if you can't perform 2 out of your 6 daily activities on your own,
Okay.
such as eating, dressing, bathing, toileting, transferring incontinence,
Okay.
you'll have immediate access to your $350,000 death benefit.
So for say if I need a nurse or some type of assistance to help me with my daily activities, I could use this money for that.
That's correct. You can tap into this death benefit and you can either pay them or pay the mortgage as well.
Oh, that's good to know.
And then there's also the terminal illness rider, excuse me. If a physician gives you 12 months or less to live, you'll have immediate access to this $350,000 as well.
Wow. Okay.
This plan is also portable, meaning if you move or sell or refinance your home, you can take this plan with you without having to requalify and open up a different plan.
Okay, that's good. That's awesome.
Yes. And then it's also convertible, so this is a term plan, and at any time you can convert it to permanent for life without needing to requalify.
Okay, that's good.
All right. And so, John, for your monthly premium, it would be $83, and for you, Mary, is $72. So, John, and if you should die, your family would be taken care of. Mary, if you should die, your family would be taken care of. In the event that either of you or both of you become critically, chronically, or terminally ill, you'll be taken care of. Now do you see why we recommend the home mortgage protection plan to our clients?
Yeah, it only makes sense.
Yeah, it only makes sense, huh?
Yeah.
So either one of 2 things will happen. You guys will either be approved and we are clear to move forward with this plan,
Okay.
or 2, something comes back in your health and we'll have to look at different options. But just so we're clear, all that we're doing today is seeing if you guys even qualify.
Okay.
So all I'll need to do is go over a few things on the application. Sound fair?
Fair enough.
All right, sounds good.
Okay, great.
Thank you.